How would you characterize the global economic outlook, and is recession risk rising?
Well, first of all, I think if you look at data that is coming out, seems to converge into the idea that we can indeed manage a soft landing. Of course, the latest data still shows that the fight for inflation is still there, is not over. There is a lot of stickiness in part of the inflationary part, but consumers are holding up pretty well. I mean, there is no collapse of consumptions, although it's definitely not well spread. The U.S. seems to hold up a little bit better, while maybe if you come to Asia, particularly in China, you see a more marked slowdown. But I would say, for the time being, the outlook is pretty consistent with a soft landing, and so we remain somehow positive on the situation.
Next week is going to be critical for the Fed, and the global financial markets will be watching that decision. In your opinion, Sergio, should the Fed go by 25 basis points next week, or is there a case for 50 still, given the softening labour signals?
I think that the most important topic to be addressed is to definitely fight inflation in a comprehensive and final way. And, it looks to me like the data that is coming out is not yet confirming that inflation is totally under control. Therefore, I think the market seems to be a little bit too ahead of the curve in expecting the Fed to go so aggressively. But in general, also for the ECB, the inflation topic is still open. So I would say probably a cut, but not as the market expects.
If we can turn to Europe, what's the appropriate course of action for the ECB that meets today?
Yeah, I guess a moderate cut, because of indeed there is room for the ECB and in general the central banks, as I said before, generally to do some cuts, but the scope and size of those cuts have to be coherent with the first mandate is to the fight of inflation, and then eventually stimulate the economy.
How are your German corporate clients feeling about the economy when a giant of German industry, Volkswagen, is under considerable pressure and may be forced to close plants and lay off staff?
Well, in the last 18 months, we have been seeing definitely a slowdown in terms of the economic outlook, orders, and so there is a sense of call it frustrations and among the clients in respect of the outlook for the economy, and I think that in that sense, some of the issues that are we debating are probably more macro and secular, rather than cyclical, and therefore it's a case that car manufacturing, like in the case for Volkswagen, is affected not only by cyclical elements, but also the fact that China, with its capacity and quality coming to the market, is putting a lot of pressure on call it European car manufacturers.
And it's an observation that Mario Draghi made in the findings of his report on European competitiveness. What is the way forward to get the edge again?
I think the way forward has to be a profound political willingness to implement those plans. I think Draghi's plan is well written, is well defined in terms of what needs to be done, but the most important topic in all this situation is the willingness and the political desire to go as far as doing all of those things. And getting 27 countries to agree on those priorities is not going to be an easy task. So I'm afraid that is going to be most likely something that we saw again, a great plan that is going to take time to be accepted and implemented. But without true common markets, banking union, capital markets union, and all this is going to be difficult for Europe to get out.
And if